Thank you for joining me. I'm Alex, and I actually have a treat for you today because Fitbit is one of the first two stocks that I've ever bought, besides ETFs and mutual funds and, retirement stuff. So, Fitbit makes fitness trackers, shockingly, and so they're best known for having kind of like the smartwatch thing without smart or watch. And they're these days a fairly old company. So they grew up with doing fitness trackers when no one else did that, and when your phone did not have that capability. So you would have thought that they would, be big, make it grow a lot, and add more stuff to their fitness trackers, do more stuff about fitness, do more stuff, expand, and do all that stuff. And that kind of hasn't happened. So that's kind of why we're here. So the price is $329. They're up over 3% on the day, which is double the S&P 500. And they had a bit of a rough year, 3 years. It's been a while. Anyway, so they had a bit of a rough year, and they went from over $4, 4.50 about a year ago to now 3.29, which is not great. And their PE is -6, so they actually make a loss of over $180 million, I think. And their the value of the company is $886 million. So very small company in stock market terms, and a huge loss comparatively to their market value. So dividend yield obviously zero because they haven't made a profit in years. Revenue is down actually over the past 3 years. Not consistently, it went up, 3 years ago, and from there it went down significantly, over 20%. Profit is also down, which means the loss is up. Actually, the loss is not down. That would be a good thing. So, to summarize that a little bit, they still just make the fitness trackers. They don't really make anything else. And as I said, they're kind of smartwatches without the smart and the watch. So back when Apple came out with their first Apple Watch, everyone was like, no one's going to pay $10,000 for an Apple Watch. And surprisingly, a lot of people did. But obviously, the price came down significantly from that. And an Apple Watch, now in the hundreds of dollars, does so much more than a fitness tracker that you still spend like $80 on, and then you need a wristband for it for some reason. So they obviously cannot compete with smartwatches. All the smartwatches have a fitness tracker in them. Most cell phones have kind of a fitness tracker in them. They measure the steps you take and stuff like that. You just need an app for it. So that's kind of why I'm kind of bearish on the outlook of Fitbit. I don't think they're going to last too much longer. It's just I'm doing this analysis because when I first started investing in the stock market, I looked for companies that were really cheap. Fitbit even then was under $5, and or around $5. I'm not sure. And I kind of just want to help people who are starting to invest right now kind of not make the same mistake. To be fair, though, I kind of did not think that Fitbit would end up this way because I kind of underestimated the growth of smartwatches. I really didn't think that a lot of people would want a smartwatch and would pay the kind of money for it that they cost. Now, the cost has come down significantly, but the battery still doesn't last very long, and they're kind of still bulky and not really that useful, but that's going to change in the next couple years significantly. So I really don't think that Fitbit is going to be a great investment in the future. I really don't think they have a good long term outlook, even in the next couple years, 5 years at the most. If they don't get into a lot of other things, then I don't think they're going to last very long. So, Fitbit is a very cheap stock, but unfortunately, for a very good reason, and they haven't made a profit in 3 years. The loss is down over those 3 years. The revenue is also down, and I don't see it picking back up. So I'm really not sure why the price went up today. I haven't read any news about them lately, so could really be anything, but really not confident in the longevity of the company and the stock. So I would stay away, obviously. To do my usual analysis, for a dividend investor, it's a no. For a growth investor, it's also a no. And for a value investor, it's a no. So, kind of don't recommend the stock to anyone. So, that concludes Fitbit. If you like more videos like this and you haven't already, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.